Okay, Suresh Iyer joins us now, Managing Director and CEO with Canfin Homes. Suresh, good morning. Thank you for joining us. Now, disbursements have
Morning.
declined 10% year on year. Was this an exceptional?
Sorry?
The disbursements for the quarter
Yeah.
gone by, they are down 10% year on year. For a market and for a category which is growing, why were disbursements down?
First thing is you would be aware we had a small this thing at Ambala which was there. So we had some tightening of the processes and we have centralized some of the activities. So there was a little bit of disturbance in the processes. But in terms of our the way the market and the inquiries and the loggings are happening, we are confident we'll be able to bounce back in the coming quarter. But this quarter we have tightened some of the processes and looked at some of the internal process things. That's the main reason why it has slightly been affected. But on a sequential matter, the second quarter has been a little better than what it was in the first quarter, and our inquiries and logins are a little healthy. So we are quite hopeful in this quarter it should be able to pick up further.
So for the full year, are you likely to report a flat growth because of this issue, or you could come back in Q3 and Q4?
Q3 and Q4, we are very hopeful we'll be able to do better. And we had a good first quarter also. It's only because of the second quarter where slightly it has gone down. But again, Q3 and Q4, we should be able to pick up. So by the end of the year, we'll definitely clock a good growth.
And is that 18% growth guidance for FY24? Are you sticking by with that number?
Well, yes, we are quite hopeful because the market has been very positive about it. This quarter, another small thing is that, prepayments have there has been a little uptick in the prepayments, which also we are addressing. So that will be one of the monitorables. Otherwise, in terms of the disbursement, we will be able to pick up. So it should help.
Just clarify a little bit more in terms of disbursement as to what exactly it is that you're expecting.
See, we had originally anticipated a disbursement around 10,500 crores. So this quarter being a little slightly lower, we'll try to catch up. So at least, compared to 8,900, we should end up somewhere around 10,000 crore at least by the end of the year. And this will also, even if we do a little better than what it is in the third and Q3 and Q4 compared to last year's, we should be able to easily reach 10,000 crores. That will be a 10% plus growth in terms of the disbursements. And that should also help us in the asset growth.
How much of your current loan growth is coming because of your channel or because of your association with Can Bank? I mean, how much is generated by Can Bank? How much is not generated from Can Bank?
No, we don't have that tie-up with Canara Bank where leads are forwarded and everything. We have our own internal sourcing. One is the DSA channel, which contributes to a very large component of the sourcing. And then a little bit of it comes from the direct sourcing and online. So mainly it is our own internal DSA sourcing, which brings the disbursement. We don't have any tie-up with Canara Bank.
Because of the issue in Ambala where you had to fix the problem, could there be a near-term uptick in NPAs? Because I was looking at the NPA trajectory, suddenly it's gone from 0.6 to 0.76.
Correct. No, it's not because of because that had nothing to do with the asset side of the book, the Ambala issue. So not because of that, but we had, if you recall in the last quarter also, or in the beginning of the year also, indicated that we have a almost 690 crore restructured book, which is going to come out of restructuring. And we had anticipated that, there will be some NPAs which will come out of that book as well. Because the customers who had opted for restructuring had taken it at the time when the rate of interest was the lowest, whereas today the rate of interest are at a peak. Plus, this 2 years of restructuring means the interest has been capitalized, and so therefore, when they have come out, the actual EMI is on the higher side. So because of that, there is a little bit of this. So we had anticipated, although it is I wouldn't say on the expected lines, but it is still there. And to cover up for that, we have anyway taken a management overlay. So in terms of the provisioning or anything, I don't think any further impact is expected because of this. And in terms of our non-restructured book, our NPA levels are very much in line with what it was in March. We had a 0.55% gross NPA in our non-restructured book, which continues on very similar lines.
On the positive side, though, Mr. Iyer, there's been a uptick that one has seen on your NIIs, almost about 26%, driven by better yields. How is it that one should look at this? Is it on account of repricing of loans to reflect rate hikes, or is it on account of a change in portfolio mix?
No, there's no change in portfolio mix. It's mainly because of the rate hike which was yet to be passed on. We have an annual reset clause wherein the interest rates are reset once in a year, depending on the month in which the customer takes the disbursement. In these cases, we had at the beginning of the quarter around 12,500 crores, which was yet to experience one last rate hike of 35 bips. So out of that, around 6,000 crores have actually experienced that rate hike in the last quarter, that is Q2, and another 6,500, 6,800 crores is yet to be see that last round of rate hike. So there is a little bit of buffer we still have in terms of the pricing that we have to pass on to the customers.
SBI management last day said that this Dussehra you will expect a special scheme from us. Would you be also considering something like this, Diwali Dussehra? Maybe some schemes, maybe some discounted rates?
We actually have announced a slight, better rate for a segment which is having a higher, CIBIL score or a credit score, as well as customers who are in the slightly 35 lakh plus segment. So we have already offered that, and we will see how the market reacts. If required, we will also offer something, because now, as you have seen, we have a good, our spreads have slightly improved and gone back to the old levels. So we have a slight possibility that we can offer a little better rates for the rest of the segment also. So we have also done something similar, although may not be on the same to match SBI, but with a little bit of difference from SBI rates, we have offered something for our customers as well.
Sure. Okay, Suresh, great to have you on the show today and highlight how the quarter has been, what's the visibility looking like, and clearly, assuring us that Ambala was a one-off case and there shouldn't be any concerns emerging on the NPA book henceforth, and they're sticking by with their loan growth guidance, that of 18% for the full year.